There's also a worldview that the energy markets are flagging a lack of demand, and particularly maybe from China. And so you could also spin a bullish tale around this data. But in the long run, humans thrive on cheap energy, and the world has a bountiful supply of it today.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we have Doomberg of the Doomberg Substack. Doomberg, thank you for coming back on the show.
Steve, always a great pleasure to chat with you. Looking forward to this one.
I am as well, sir. I always look forward to our chats. Let's start out like we always do. And what is your macro view right now of the energy markets today?
In the absence of geopolitics, the energy markets are extremely well supplied. OPEC's decision to continue to ramp up production over the weekend has been noticed by the markets. Natural gas can't get past $3 a million BTU in the US. Coal is reasonably well behaved, $115 a ton for Newcastle coal, and LNG prices are trading in sync with Brent crude on an energy content basis, and are currently around $11 a million BTU landed in Europe at least. And so there's nothing in the markets, crack spreads, the futures curve. There's nothing in the energy markets that is screaming crisis or shortage. And we noted with interest that the CEO of Diamondback was out flagging a developing glut in oil in the second half of the year, much to the chagrin of the peak cheap oil crowd, I'm sure. And so, absent a major geopolitical earthquake, and there's certainly many potential tripwires out there, which I'm sure we'll discuss, the energy markets are very well balanced, if not oversupplied, which is usually conducive to reasonable economic growth, all things being equal.
Okay, so you see the energy markets right now, whether it's oil, natural gas, coal, are all pretty fairly priced, which is not indicative of a recession, which is indicative of cheap energy.
It's conducive to meaningful economic growth, again, depending on other conditions, of course. There's also a worldview that the energy markets are flagging a lack of demand, and particularly maybe from China. And so you could also spin a bullish tale around this data. But in the long run, humans thrive on cheap energy, and the world has a bountiful supply of it today.
Okay, I started tracking. I'm going to share my screen here, and this was it was in the last episode we did. You said you can start to see an unravel in the energy markets here if you take it was like LNG landed in
it's a Dutch TTF contract, yeah.
Yeah, and you multiply that times 5.6, and basically when you start to see a spread here between the price of a barrel of Brent and that calculation, then something is up. But right now, this is 65, that's 67. It seems like everything's copacetic.
Yeah, that's one of the many indicators that we use. Of course, in a true, close the strait disaster, you would also see a spread between Brent and WTI, Brent crude being sort of the European grade of crude oil, and West Texas Intermediate being the American one. And our view is that if that spread were to blow out, which it hasn't, that would be indicative of potential, the U.S. limiting exports and keeping its energy home. And so when LNG and Brent start trading wildly apart from each other, that's usually a sign of ailment somewhere in the market. And ailment is not usually associated with, sufficient supply. There's a shortage somewhere. And so the two charts, that we've talked about are some of the indicators that we use. You're showing the Brent and WTI correlation, but if you circle back to the gas crude one, that blue line and that green line will generally trade in sequence. And once you sort of see it, it's kind of hard to unsee it, right? Like now that you've been tracking it.
Yeah.
When the headlines are screaming crisis or war or confrontation at sea, and the market is completely ignoring it in this regard, well, in these regards with these two charts, generally you can fade such concerns. Sometimes the market gets things wrong, for sure. But when we come in, we have our Bloomberg launch pad has probably 30 charts on it, and in whole, if there was something amiss somewhere, you can normally pick it up pretty early. The developed energy commodity markets are exceptionally good at seeing through headlines because most of the firms, these trading houses doing the marginal trades, have very sophisticated intelligence gathering operations because they have billions of dollars on the line and they can afford to build such organizations. And they're not hampered by insider trading necessarily in the way that, Joe Sixpack here in the US would be. They'll often front run events quite well. And we use such indicators to, balance the propaganda that is just, flooding the field all over the world these days. And as objective reality becomes harder to measure directly, market indicators are probably the best source of real-time information.
Yeah, yeah. When these companies have that much money on the line, they'll spot it first, and you can pick it up by paying attention to these ratio charts.
Right. They spot it first, or and other indicators too. Those aren't our only ones, but they can spot it first, but you can still spot it well ahead of the crowd. And that's kind of where we try to fall in.
Yeah, yeah. Okay. Okay, energy access, development, and geopolitics. Alvarez has an interesting question here. He says there's some chat about basically, last I looked it up on Google, it was like 38% of the planet's population has access to no electricity or intermittent electricity. So I think about 1 billion people is probably right. So he says about 1 billion people are without electricity or energy, almost all in third world countries. Being some parts of the world very corrupt and most of its under electrification in the poorest parts, why would those countries spend cash resolving those issues instead of taking the cash or stealing it? So he's basically saying that, the vast majority of the votes are going to be in urban areas where there's a lot of population and they have electricity, and there's fewer amount of votes going to be out in, we'll call it in the sticks, in the countryside, with access to no electricity. So why do they have an incentive to electrify that part of their constituency?
I'll zoom out a bit on this question and talk about the critical role of what we would call political infrastructure in the development of a country's economy. And as a test case, I think it is insightful to compare and contrast Canada with Venezuela. They're both endowed with huge hydrocarbon resources, and they have both historically shown pretty good ability to develop those resources for the benefit of their citizenry. And Venezuela took a wrong turn politically and went from being the wealthiest country in, South America, Latin America, to an economic basket case. Whereas Canada, with sound contract law and good governance and good institutions and reasonably representative democracy, has been able to slowly and systematically increase its energy production, despite some hiccups around the climate agenda and so on. But broadly speaking, the framework within which business can be done in Canada today is far more stable than it is in Venezuela. And so when you have a Venezuela situation, hyperinflation, military dictatorship, risk capital stays away from it. And when you have a relatively stable situation like Canada, risk capital flocks to it. And it's no more complicated than that. Corruption is just one element of societal sort of economic framework that needs to be considered. The US is wildly corrupt, for example. But still, much capital gets formed here and much capital gets deployed here. It has relatively strong institutions, and it is in possession of the world's reserve currency, and so on and so on. But nobody would look at Washington, D.C. or the military-industrial complex and claim that this is, free from corruption and fraud. But when things get too far gone, like they have in Venezuela, things rapidly collapse. We're kind of seeing that in South Africa, tragically, at least a bit, and their grid is becoming unstable. We're putting out a piece probably Friday about what's going on in Australia. And, one of the things that people don't realize about an electricity grid, and this question was about electricity, is like 99% reliability is a disaster for developed countries. You need like 3 or 4 nines reliability for industry to thrive and for society to gain maximum benefit from the grid. So if you're talking 90%, 85%, 60% grid reliability, you just can't have industry there, period. And so, it's once you lose it, it's sometimes hard to get it back. But it really, electricity availability is a lagging indicator of political structural integrity. Let's put it that way.
That's an interesting way to put it. Okay, so basically what you're saying is that risk capital investors are going to go to where it's treated best, and if and there's enough political instability, then investment won't go there. And he's right, it won't get electrified. But if
Right.
there's enough certainty there, then investors will step in and they'll build the power plant.
Yeah, pardon the pun, but it's also a bit of a chicken or an egg situation. If you didn't have the framework politically needed to implement the advent of the technologies that underpin the grid at the time that they were invented, in the US and Europe and Canada certainly did, then it's hard to play catch up because rolling from one crisis to another is hardly conducive um, to attracting investor capital. Just look at Argentina; it's been a century, right? And look, Argentina is relatively, from many measures, in pretty good position. But the fact that it keeps defaulting on its international obligations and it's a bit of a political basket case makes it very hard for risk capital to go there. We wrote about Milei and this case of the nationalization of YFP, their oil company, and how until that's resolved, Milei is not actually going to be able to implement his overall agenda. And so, the ghosts of decades ago still haunt these countries. Argentina, a clear example of that. And this is why, of course, it's all the more important that the U.S. political situation corrects itself, because it's not inconceivable that the U.S. could fall off. Not to get too political, but we were sort of talking internally the other day, with all of this Russiagate stuff coming out, which is not being widely covered by the media, but it's still sort of shocking to read. Once you start arresting former presidents, that's a hard treadmill to get off, yeah? And the U.S. started arresting former presidents in 2023 when the Biden administration, mostly through its proxies, put Donald Trump on trial. Does anybody think Trump is going to be able to resist retribution? Probably not. And the logical end in all countries when such things begin to happen is that presidents don't want to leave office. And you end up with dictatorships very quickly. And imagine right now, if the Democrats were to retake power in 2028, the wave of arrests of current members of the Republican administration would be basically the end of democracy in the U.S. So we're at a very dangerous time. It is a bipartisan indulgence once it gets started. And I think that's why, what happened in 2023, which we were greatly concerned about at the time, regardless of what you think of Trump or his behavior or the criminality of his behavior. And there are wildly different views on this subject, depending on which part of Twitter you decide that you're going to peruse on any given day. But nonetheless, once former presidents start getting arrested, presidents don't want to leave. It's just the way the world has always worked. And the U.S. is in a very, very precarious situation right now.
Yeah, and he's even mentioned Trump has even mentioned oh well, maybe I will run for a third term. Maybe let's pull on that thread a little bit. What do you mean by Russiagate? What's happened recently that?
Well, I mean, I think it's objectively non-political to say that the accusations that Russia interfered in the 2026 election were made up out of whole cloth by the Obama administration, including apparently President Obama himself. And intelligence was doctored to disrupt the peaceful transfer of power, to make President Trump's presidency a failure. It was largely successful. And I just think it was a great scandal. And serious laws appear to have been broken. They will have their ability to defend themselves in court, of course. But month after month after month, the legacy media in the U.S. saturated the field with propaganda about how Trump was Putin's puppet. Putin interfered, stole the election from Hillary Clinton. This was conceived by Hillary Clinton and Barack Obama. It's just, I think, the evidence, any fair reading of the evidence that has been released by Tulsi Gabbard, it can lead to no other conclusion. And those who conclude otherwise are just truly partisan. We consider ourselves ideologues, not partisans. There's much about Donald Trump that we like, and there's much about Donald Trump that we don't like, but we're capable of objectively reading a 100-plus page document dump and realizing what actually happened back then. And there's a straight line from those events to the war in Ukraine today. And history will judge those involved in this scandal harshly, we believe, as they should. Having said that, if Trump proceeds and has his former presidential rival arrested and his the former president Obama arrested and the people involved arrested, as great as that retribution might feel to those in the MAGA movement who lived through those periods and understood in real time what was going on and were deplatformed or censored for expressing those views, such retribution is not without consequence. And so it's a difficult question. Very, very high risk in our view, and that the risk is not being properly articulated by many in the legacy media either. They're just not even covering the story, which of course, I suppose on one level makes sense, but I'm sure you've seen those documents. Like what I'm saying is no surprise to you.
Yeah. Okay. That would have really rewritten history. What do you see going forward? Is there going to be any? Okay, if the Democrats do win the next election, I could certainly see that they would be, looking to enact an eye for an eye. Do you see this as kind of maybe a fourth turning, or what?
Yeah,
What do you
I
think?
mean, look, Trump. Let's be honest. Like, it's not like Trump isn't engaging in very questionable behavior today. Trump coin and various other business dealings, and um, one could argue the whole tariffs regime is unconstitutional. I think persuasively one could argue that. And who knows? The tactics used in the deportation of people who are here illegally could be recast by a future administration. There's no shortage of things that can be retroactively made illegal. And so, we don't point this out to urge caution or to even suggest an alternative path. It's just an observation. Like when countries start arresting former presidents, existing presidents don't want to leave. It's no more complicated than that, Steve. And it happened in 2023. It was a monumental thing. And Trump got reelected, much to the shock of those who were doing the arresting. And now that Trump is in charge, suddenly they're all being investigated. This is a vicious cycle. It takes courage to end it. It takes wisdom to end it. Those are in short supply in either party. And people hearing this who are very pro-Trump will say, well, of course, it's always the Republicans who have to wave the white flag, but that's not going to matter because once the Democrats get back in, I could hear all the arguments. And so I'm not saying that the current administration needs to show restraint or to behave wisely, and I frankly don't expect that they will. But if nobody ever does, then the end is quite clear.
Yeah, yeah. I wouldn't want to leave early if I knew that that I
Yeah.
was going to be arrested either. So I'd do
Or
everything I
you would at
could.
least install your successor, those types of things. Once all single party rule leads to massive corruption. For example, California, of course, but Texas is no different. Texas is actually a pretty corrupt state. Some of the characters in Texas leadership have very dubious pasts. And, single party rule by Republicans is no more immune to corruption over time than single party rule by Democrats. And we're starting to see that in Texas. Countries like Canada with basically single party rule are starting to see, fair bit of corruption as well. So it is what it is. It's forever thus fourth turning, as you say. As investors, as analysts, the job is to recognize reality for what it is and play the pieces on the board as they lie.
Yeah. Pulling at the Russia thread a little more, any updates on the Ukraine war? Last time we talked, this was a war of attrition, and
Yeah,
Russia's got a lot more little army men than Ukraine does. What are some updates on?
sure. I mean, we're speaking at a real point of disadvantage today, August 6th, as the calendar says behind your left shoulder there. President Trump's advisor slash negotiator slash fix-it man, Steve Witkoff, is in Moscow meeting with Russian President Vladimir Putin as you and I are talking right now.
Oh,
And the outcome of that meeting will likely alter the direction of things in ways that, depending on that outcome, our answers today might seem irrelevant or naive. And so it's challenging to comment on something that is moving this fast. I will say generally, over the past 18 months, we've begun to study the war very carefully for obvious reasons because of its impact on the energy markets. And we've become, we've developed a series of open intelligence sources that you can track the war. We've read the propaganda of all sides. Over time, you get to see which propaganda is more accurate, which ones are more outrageous. The propaganda is thick. It's very hard to cut through, especially for those who are only peripherally checking in on things every once in a while. In aggregate, our analysis is that Russia is winning a grinding war of attrition. It is far better capitalized than its opponent. Its supply chains are far closer to the battle lines than Ukraine's are, because Ukraine's supply chains are basically Western supply chains, whereas Russia is wholly self-sufficient. The head of NATO openly admits that Russia is outproducing the entirety of NATO by a factor of 4 alone. That's before contributions from Iran, China, and North Korea are taken into account. The West doesn't make stuff. And so, our view is that the Ukrainian military is on the cusp of a serious unwinding. When wars of attrition end, they tend to end quickly. Some key major cities in the Donbass look set to fall or are already basically encircled. None of this is really being reported to any great extent in the Western press. We view Witkoff's visit to Putin as sort of the last Hail Mary attempt to try to negotiate a settlement, but it's hard to see a settlement that isn't effectively a capitulation on the part of the U.S. that would outrage Ukraine. The Zelensky government itself is so far apart from what Putin is dictating as his terms that it's hard to see anything other than a military solution presenting itself. And it's hard to see any other military result than the one that I've been alluding to with this answer. Losing wars is hard. It's very dangerous, especially when the real combatants in this war, which is the United States and Russia, are both nuclear superpowers. The great tragedy of this entire affair is that the people of Ukraine have suffered enormously. And, to Americans, this is something that's in the news in a faraway place. To the people of Ukraine, this is a disastrous tragedy of epic proportions. And, they would be, it would be understandable that if there would be a huge amount of anger at all sides by those citizens in Ukraine who have suffered the most because of this conflict. In many ways, NATO has been exposed. That's very dangerous as well. And so it is a precarious time. We wrote about this in a piece called Crescendo. And when we dive into this, we get some angry pushback, mostly because people are living in their own propaganda worlds. And what we say can sometimes be totally inconsistent with how things are presented. We note with some interest that the majority of people who express anger at our views live in Britain. The British propaganda machine is notorious for its, boldness, let's say. And we could hardly read the British papers. The things that are claimed in the British papers are just so wildly out of sync with reality, as can be neutrally observed through open source intelligence, that it's effectively nothing more than a great contra. So we'll see how the meeting with Witkoff and Putin goes. No one would be happier to see an end to hostilities than us. And I presume President Trump is sincere when he says similar things. We think war is always a catastrophic failure of diplomacy. And nuclear war in particular, of course, would be ultra catastrophic. And let's hope saner heads prevail. We doubt it. Our suspicion is this war will end militarily, and how nuclear powers accept conventional military defeat is not a question one should be probing too often.
Yeah. Okay. So basically, NATO versus Russia, by their own admission, NATO is underproducing by a factor of 4 in that race. So the way you see it, this can't keep going on forever, and we might be closer than not to a settlement here. Hopefully, it's on the side of peace.
Yeah, of course, that requires look, winners dictate terms, right?
Yeah.
Like the losers don't dictate terms. And one of the reasons you should be very hesitant to get into a war is that you might lose it. Um, we flagged this all the way back in the early part of 2024 in a presentation we made to our pro tier called Sleepwalking into the Abyss, where one of the key slides in that presentation was, how does NATO lose this war? Like, it was clear back then. Like, the thing about wars of attrition is it can be very clear when they're effectively lost, not that when they're over, but when they're effectively lost. And when Ukraine's massive counterattack to retake Crimea failed in 2023, it was very clear that given the inherent size and manufacturing and energy advantages of Russia, let alone the capability of North Korea, Iran, and China to buttress those resources, that Russia knows historically how to fight a grinding war of attrition. It's literally what it does in every major war. And, the direction of travel, if you follow the day-to-day mapping updates, and the one we follow the most is a Ukrainian product with close ties to the Ukrainian military called Deep State. And if you pull up the status of that map a year ago and you pull up the status of that map today, you can see the direction of travel every day. It's never huge, but it's slow and systematic, which are characteristics of Russian military doctrine. And so, Russia is building more weapons. It's recruiting more members of the military. When you look at things like the body exchanges and the relative disparity between the two sides, you begin to question the propaganda around even what Trump is saying Russia's military is suffering as it pertains to casualties. We find it interesting that the president repeats such things, tells us a bit about who's informing him and what he's believing. So we shall see. When you read the propaganda on all sides, there's only one side expressing panic and demanding a ceasefire, and that is the NATO side. Russia's not demanding a ceasefire. Russia's willing to continue to execute the war, and that is proof that they're clearly not on the verge of collapse, and so on. And so, but again, saying such things out loud can sometimes anger some people. What can we do? We have to call them as we see them, and we're not afraid to be wrong.
Well, we'd rather hear the truth than what do they call it? Untrue pleasantries.
Yeah. Comfortable lies.
Comfortable lies. That's what it is.
Yes.
Yes. Okay. Sab has a question about the BRICS. He says, "How do you see the conflicts of interest playing out in Brazil between the U.S. and BRICS? The U.S. tries to extend the sphere of influence in South America, but Brazil is one of the main BRICS countries. If something happened with Iran in the oil shipments to China, Petrobras would be one who could be one of the local supplier to fill the gap. Do you have any thoughts on that?"
I think Brazil, of course, being the B in BRICS, is one of the fronts in World War III, which is how we framed the whole tariffs discussion and the war in Ukraine in crescendo. Our view is that when Putin started selling down treasuries and buying gold, that was the beginning of World War III. And what we're seeing today, to an analyst armed only with the sort of fact that Russia was openly fighting the US dollar system and BRICS was trying to develop an alternative to the US treasuries as neutral asset reserves for the settlement of imbalances in international trade, you wouldn't be surprised by these headlines. You'd be surprised at how they're being framed. Back to the, Brent versus WTI and Brent versus Dutch TTF LNG. Any sustained disruption in oil supplies will cause wild and massive fluctuations in price, and it's unclear who benefits from what. All oil that is being produced today is being consumed somewhere, and so changing who buys what leads to winners and losers. Just as an example, Trump's secondary tariffs threat is just such a bluff that will be called. Like, if India wasn't buying Russian oil today, and if China wasn't buying Russian oil today, they would immediately go to the market and buy it somewhere else, which would drive the price of non-Russian oil through the roof. And that would impact the US, devastate Europe. India claimed that it was the Biden administration that okayed their buying of Russian oil because Europe had to buy non-Russian oil, and that displaced supplies that were historically going to India, which kind of shows you the sort of duplicitous nature of this entire game. So our view has been that the US Navy should be escorting every single Russian tanker of oil to get it to the market as quickly and flawlessly as possible without any friction whatsoever to drive the global price of oil down to impede Russia's profits. That is the only way to win a sanctions war against a major oil producer. We've been making this argument since April of 2022. It was a dumb idea when Biden proposed it, and it's an even dumber one now because Trump at least has the advantage of years of evidence of Biden's miscalculations. And yet here we are in August 2025, and the president of the United States is trying to sanction Russia's volume. It's not going to work. And we have to call a spade a spade. It's going to fail. This is a bluff. If he tries it, results will be catastrophic for the US. And if they call his bluff and he backs down, US geopolitical prestige will be badly damaged. I don't understand how he got himself painted into this corner. By the way, when you listen to him on the Joe Rogan podcast before the election, he clearly understood all this. It's like he had been reading Doomberg. And yet somehow he's been talked into this position by the Lindsey Grahams of the world, by the Keir Starmers of the world, by the Macrons of the world. And so here we are. Friday's coming. Maybe we'll find out today. Maybe Trump will be enraged at the lack of progress in the meeting with Witkoff and Putin, and he will announce 100% sanctions on India and China. And China will respond by choking off all the critical materials needed to keep the U.S. economy going, and the automotive factories will close within a month here in the U.S. He's already seen that this threat doesn't work with China, which is the bizarre part of it. So honestly, we're at a loss. And usually when we are at a loss, as we are now, there's some critical piece of information we're missing. It can't be this transparently simple to analyze that we could do it, for example. Nobody's calling us and asking us for advice, right? We're just doing this on our own with open sources, using our brains, deductive reasoning, a little lateral thinking. It's not like, the U.S. Department of Defense is calling to get our opinion on things, which they would, actually. We'd happily give it. But here we are. Again, it's just amazing to watch. I don't know what missing information we're getting, and maybe Witkoff will strike some last minute deal with Putin, and Putin will capitulate and agree to a ceasefire unconditionally, and face down the storm of opposition that would rise within Russia if you were to do that. So we'll see. We're at a loss.
Okay. All right. You're just as confused as everyone else. There's got to be something, because Trump understood this before he took office. So the fact that he's basically going against that now, having a track record of the last 3 years, knowing that it doesn't work, there's got to be something there that no one's seeing, except for the powers that be. That
who knows? Compromise. All the rumors are swirling. Who knows? Politics is a dirty business.
Yeah. Okay. Okay. Derek wants to know. He says, Peru's recent change in policy concerning mining. Do you see Peru as more investable?
I mean, more than it was, I suppose. But one of the things we've argued that is even becoming evident in the U.S. is that such whiplash is not conducive to capital formation. The capital planning cycle of large projects like mines and oil and gas fields is longer than the political cycle of these countries. And that's becoming a real issue. Peru is a bit of a poster child for that. So while we would welcome, the new president's commitment, whether she follows through on that and whether it is sustained beyond her remains to be seen. And so there's a risk premium to such political whiplash that is going to be felt in countries like Peru and increasingly in the U.S. as well.
Okay. All right. But probably more positive than negative.
Sure. All things being equal, yeah. But I wouldn't put my money on the consistency of such commitments. There's a marginal investable dollar that would like to take such risks, I suppose, but it's inconsistent with our worldview, that's for sure.
Okay. All right. Moving on to nuclear power, uranium. Rusty wants to know. He says, "Do me our favorite foul. Please tell us your thoughts on the companies in the West that should do well processing uranium and the engineering companies to watch for the power plants and the new grid."
Yeah, company level analysis is not what we're known for, and since we don't, invest in public companies as a general rule, it's not something we spend a lot of time thinking about. So I would be hesitant to offer specific names. On top of that, of course, we're not registered investment advisors and all that stuff. We run a widely circulated periodical, not a research firm. Um, Broadly, I can say that we would rather not invest in the commodities directly, nor the producers of such commodities, because broadly, over the long term, um, the real price of all commodities is lower, which is a point I've made on your show before. But any company that is leveraged to volume of commodity consumption, when you enter a bullish environment like uranium is undoubtedly entering, those are more interesting. And depending on management and how well they're run and the quality of their assets, there might be an investable opportunity there. Royalty companies, engineering companies, like the questioner asked, those are far more interesting than E&P companies, broadly speaking. You know, if a private enterprise pitched me on a new technology to help the Permian handle produced water, I'd be very interested in that because produced water and getting rid of it is a key bottleneck to the volume of oil produced. That's interesting to me. Um, I've got some oil claims that might hit the lottery. It's not interesting to me because I don't want to be in the drilling business or the development business of the actual commodity itself. I don't want to own a mine. I'd like to own the company that makes that mine profitable. And that's our worldview. The commodities themselves and the companies that extract them are far less interesting. There's lots of people who have a different view, who spend all their lives, sifting through the Vancouver listings of junior gold miners, and maybe one of them hits the lottery and they make life-changing money. It's not how we operate. It's not what we're into. And so I'd be the last person to ask such questions.
Okay. All right. Commodities and resource performance. Let's see. Ciara wants to know, can you give your outlook for the rest of 2025? He's saying gold versus platinum, oil versus uranium, copper versus lithium. I could pull them up on the chart if you want. I
Yeah.
basically just divided one by the other. And
Yeah. Again, I would just say, other than gold, the long-term real price of all of those will be lower.
okay.
And so we're just not going to invest in them. We don't view gold as a commodity in the way that the others are, not even platinum or palladium, because those have industrial uses of consequence. So does silver now, especially in the solar market. Industrial metals, they tend to trade lower. People trade them, they look at such ratios. There's a whole ecosystem of content creators that serve that niche. It's just not us. We view gold as the only long-term store of valuable available to investors as a savings vehicle. We view the price of gold as the inverse price of the US dollar. So gold's role in our portfolio is in the savings component of our portfolio, and it is one of several that we use in a diversified basket to preserve wealth for future generations: land, collectibles, gold. The other commodities, we don't spend much time looking at unless there's a crisis. And then, our broad view, again, I think as I've articulated on previous appearances, is that fades super spikes as opposed to trying to time them, because all super spikes lead to gluts. But trying to predict a super spike in advance or to time the market for such commodities, we think is not accretive to compounding wealth.
Okay. So basically, platinum, oil, uranium, copper, and lithium over time should go down. Gold in relation to currency should go up in value because as governments print more currency, then it takes more of those to buy the same ounce of gold. Is that kind of what
Yeah,
you're saying?
we did a presentation called Goldileo, the yellow rock at the center of our financial universe. We don't view gold as going up and down. We view fiat currencies as going up or down against gold. And so, 20 gold eagles will buy you a very well-appointed mid-sized SUV today. and 20 gold eagles will buy you a very well-appointed mid-size SUV in 10 years. And so when I see the US dollar value of my gold holdings go up, I don't get excited about that because the purchasing power of the US dollar value of the rest of my portfolio is broadly going down. And so gold is just a vehicle to save purchasing power for future generations. It contributes to the floor of my personal net worth. I don't invest gold. I save in gold, and occasionally I rebalance my savings. If gold is appreciated, I might sell some of it and buy some land. If I need to liquidate some of my savings in order to make a compelling investment in the private sector, I will sell a piece of property or sell some gold and go ahead and compound that wealth in the private markets like I like to do. But broadly speaking, I don't invest in commodities because they always go down in price. Not always, maybe if you get in at a true sort of cyclical low, you might be able to make money. But over time, the oil and gas companies and the mining companies are deflationary machines. Like you are betting against technology, and it's a bet against the human endeavor. And those are foolish bets in our view.
Okay. All right. As time goes on, processes get more efficient and they can get the stuff cheaper.
Yeah, I mean that you just, as you say, plot the price of oil in ounces of gold, and you tell me.
Yeah.
If you're interested in owning oil, just own gold, because gold beats oil over a time frame of decades.
Yeah. Yeah. Okay. John wants to know your thoughts on silver. Thoughts on the potential for a genuine silver squeeze in the near term.
Again, this meme type stuff is just utterly inconsistent with our personality as investors. We build and compound our own We build and compound our own capital, and and then we save it prudently. And the thought of trying to front run a squeeze based on what you're reading on Reddit, to us is indistinguishable from going to the casino. The house always wins. Wall Street takes its rake. You'll see some people do really well. Whether they keep it is a different story. Silver is not a store of value in the way that gold is because it's an industrial metal now. And so, I would fade a squeeze before I try to time it, because as Nassim Taleb has famously said, which we've quoted many times, he's never seen a shortage that doesn't lead to a glut. And now silver is a bit different because it's often co-produced. There are some, direct silver mines, and so the elasticity of supply might be challenging, and the squeeze might last longer. But in the long run, shortages of supply are cured. And if you see an Icarus print in any commodity, wait for it to drop 20% and buy 6 months out of the money puts. More often than not, you're going to do much better than wasting away options premium hoping to get the big score on a squeeze. There are people who become emotionally attached to their theses. You see them on Twitter, the uranium crowd, the gold crowd, the silver crowd, various stocks, tragically stocks like AMC and GameStop. One wonders when Tesla will fall into that category, as it inevitably must. And so, once you've tied your sort of social and emotional standing, Matt Levine has written brilliantly about this, by the way, about the whole meme stock phenomenon, the brilliant columnist at Bloomberg. Once it crosses from pure financial to emotional, generally not good, especially if you're playing with money that you can't lose, Drawdowns are hard to come back from. And so it's just inconsistent with our worldview. And so we wouldn't be perusing Twitter or Reddit or Telegram trying to corner some part of the stock market because A, it's probably illegal, and B, it's unsustainable, and C, history states that the vast majority of people lose the vast majority of their capital trying to do that.
Okay. I tried to run that last one. I love what you say. Fade the spike and then basically buy the put on the other side. I missed that one on oil, but when it happens with silver, I'll be on that like white on rice. Okay. TZ wants to know, he said, are you convinced about your predictions about Mark Carney unlocking Canadian oil given the recent trade wars and Carney's failure to negotiate?
Yeah, that's still to be played out. We think much of what we predicted has come to pass. A few things that we did haven't. Um, Carney is going to unstick Alberta's energy. The only thing left to be decided is the path function from here to there, and the degree of a crisis that needs to be manufactured in order to win over the climate crowd to the necessity of such a decision. They've passed this law, national interest, pipelines in the national interest and so on. There's a few more milestones to cross. The negotiation with Trump has gone harder than we anticipated. We thought that they would quickly coalesce around a deal, but perhaps we were wrong. So we'll see. Again, Trump is a hard person to model. Yeah, you have to admit. And when you're on a 4-day editorial cycle like us, he brings with him an amazing amount of headline risk. You don't want to know how many times we've had a piece researched, written, edited, and ready for publish, and then a major headline crosses the wire that makes it moot or makes us have to change it. Can be frustrating. We've actually published at a little slower frequency in the past couple of months because of that than our normal cadence in the Biden era, for example, because it's impossible to keep up with the speed of the headlines on a 4-day news cycle like we have. We don't publish daily updates or things like that. That's not what we do. We do, set essays, and the fact that changing as quickly as it does makes it pretty challenging. But back to Carney, mostly as we thought. We'll see if Trump and Carney can come to a deal. Canada does need Trump as the boogeyman in order to step back from the climate hysteria, though. And so the fact that there's still some perceived animosity between Carney and Trump over tariffs perhaps should not be so surprising, I suppose.
Okay. All right. But you see, they just have too much oil and too much gas that to not take advantage of that is.
Well, I mean, I think Trump's long-term view, if he could extricate himself from this situation in Ukraine, is Western Hemisphere's, dominance of the energy market. And if you relabel American energy dominance as North American energy dominance, then the whole talk about 51st state and so on becomes far more reasonable. And Alberta is a global energy superpower. Alberta is Texas, and Alberta and British Columbia. British Columbia is kind of Oklahoma. There's an enormous amount of heavy crude and natural gas liquids and natural gas. It's just an enormous amount of natural gas there. And it needs to be unstuck. Alberta, unlike Texas, does not have coasts. And so it has to send its hydrocarbons via pipeline. The largest and closest coast is on the other side of a very big mountain range, which doesn't help. And the other sort of coast to its east is thousands of miles away. And so that's a real dilemma. In order for its energy resources to be unstuck, substantial changes to the Canadian regulatory regime are required. And as we predicted, Carney is pushing hard to make those changes.
Okay. All righty. Moving on to technology, innovation, and energy demand. Aaron wants to know if AI is a bubble, or at least very early in the adoption process, wouldn't the calculations for bullish energy demands be a little off?
AI itself is not a bubble. So we are participating in the private markets and a few startups. And so out of necessity, I've gotten to know a few things. There are undoubtedly some publicly traded companies that are in very frothy territory because of the excitement around AI. That does not make the concept of AI a bubble, which is a leap of logic that many investors make. The dot-com bubble was real, and so too was the profound impact of the internet. And AI will be profoundly impactful on society. What we're seeing at the cutting edge in the open source blows the mind, is scary. The but the value that can be created requires energy. It is the ultimate embodiment of energy. And so particular stocks might be in bubble territory, but the technology itself, which is what's the true driver of demand for energy that flows additionally from AI, is quite real. I can tell you that it is in the possession of an expert. AI makes that expert far better. AI will drive huge inequality. AI will also drive a boom in all things authentically human. We've given a lot of thought about what the whole AI thing means, but there will be substantial and incremental demand for energy. The US is extremely well positioned to meet that demand with natural gas, and it will. One of the ways it's going to do that is, and we're going to write about this probably next week, is the repowering of old coal plants that happen to be situated over shale with natural gas, connected to the grid, but predominantly directed towards data centers so that you get the best of both worlds. The grid is not being soaked of supply, and these isolated data centers have the grid as backup in order to have the reliability they need in order to run their data centers optimally. So there's a huge, shuttered coal plant in Homer City, Pennsylvania, where, led by EQT and their partners, they're going to put 7 gas turbines there, something like 4 or 4.4 gigawatts of power, the majority of which goes to a data center that will be co-located, but some of which will go to the grid. And in return, the grid will provide, stability and reliability to that data center. And we see, as these coal plants have been closed, they're not, those sites aren't without value. They have connections to the grid. They have a lot of infrastructure in place. Pop a few turbines on, maybe invest a few new bells and whistles, and off you go. I think that's going to happen in a big way. Natural gas is just too cheap in the U.S. for this not to happen. And last point I'll make is it'll be the death of the argument that the Marcellus Shale is rolling over because of geology. There will be increases in production to meet that demand, especially since it doesn't require pipeline offtake like Mountain Valley or so on in order to bring those molecules to market. If the new gas-fired coal plant at the old coal-fired power plant site is right there, methane will be found.
Okay, they'll find it. So basically what you're saying is AI is not in a bubble, although NVIDIA or fill in the blank may be overpriced when you look at it as like a price to earnings ratio or something. AI itself is not in a bubble. It's not going anywhere. As a matter of fact, they are going to be taking coal power plants and throwing gas turbines in them to supply these things. So it's
among other things. Yeah, nuclear will get a renaissance, and old nuclear plants will be expanded, and there's a cost curve of incremental electricity that will be brought online in ways that minimize disruptions to the grid, and those will be executed first. What happens after that? Who knows?
Yeah. Okay. Luke wants to know, he says, please address how technological innovation will outpace geological restraints.
Well, all we have is effectively centuries worth of data that says it will. Look, the hydrocarbon resource base is huge, and this is where people can trip up. So let's take a moment. A resource is what's in the ground. A reserve is a subset of the resource against which investment has been made to prove technical and economic viability. Broadly speaking, when energy prices go up, our reserves go up. And when energy prices go down, our reserves go down because economic viability swings with price. There has never been a situation, in our view, integrated across the world where geology trumps politics. Like in a Canada versus Venezuela situation like we talked about earlier, that situation alone shows you just how powerful politics is, far more than geology. Venezuela used to pump over 4 million barrels a day, and now it barely pumps 1. Nothing about the resource base has changed. Nobody wants to invest there. Chevron's the only major player, right? Whereas Canada is producing over 5 million barrels a day, slowly and consistently growing it with discipline. Geology can affect certain fields. Of course it does. Well rates and decline rates and all this other stuff. But integrated over the globe, there's, as one major executive of a super major that you would recognize once told me, when we need it, we know where to get it. Right? Politics gets washed away at $300 a barrel of oil. How much gas do you think the U.S. would be producing if Henry Hub was at 6? Like, yeah. And by the way, another fact that people just haven't internalized in their models. They talk about the break-even price of oil in the Permian. There is no such thing as the break-even price of oil. The oil in the Permian is co-produced with gas. So the break-even price of gas and oil is what matters. If gas were $6 a million BTU, the break-even price of oil in the Permian might be 0. Because you're getting all this gas, which is now valuable. And guess what? They haven't been drilling all the high gas to oil wells. They would quickly go uncork those. And oil would be the nuisance that they had to give away, not natural gas. Back to the Marcellus, it's probably 28 billion cubic feet per day. If data centers start popping up, and the owners of those data centers are willing to pay long-term contracts, $6, $7, $8 million per million BTU, Marcellus could get to 35 or 40 BCF per day easily. They know where to go. It's all about finance and politics and all of those things. And so the ultimate proof that technology trumps geology per the question is just plot the price of oil in ounces of gold, and you'll see. It's beating both inflation and geology at the same time. It's beating fiat degradation and geology at the same time, heartedly. And so I just don't understand why people get stuck in this. I mean, I do understand it. There's a whole wave of content creators who peddle this myth. And it's clickbait and exciting to talk about the crises that arise from the end of cheap oil. It's gibberish. To the extent that the people who are peddling such things know it, shame on them. And to the extent that they don't, one has to wonder about the rest of the analysis because it's quite easy to prove.
Okay. All right. I will share my screen here just to emphasize your point. This is gold divided by crude oil, and we can see that there is a general line going that way. And so,
yeah. It's 50 barrels an ounce now?
53.5.
Yeah. And you could kind of exclude that COVID bump.
Spike, yeah.
Yeah. But yeah, the direction of travel is clear. The same ounce of gold bought you, 9 barrels in the 80s or 10 barrels in the 80s. And so this is debasement and geology captured with one chart.
Yeah. Yeah. Okay. All right. Is there anything else I should have asked? Do you have any thoughts? What to close us out?
Yeah. No. Look, as usual, your comprehensive self. Only thing I would say is we just between you and me, we've soft launched a new merchandise store. Not really a profit center for Doomberg, but kind of guerrilla marketing. You could find golf balls and a mini Yeti and nice, very high quality Doomberg hats and t-shirts. We were finally able to find a merchandise supplier who was consistent with our brand ambitions. You can find that at doomberg.myshopify.com. Some great coffee mugs, fun stuff. The golf balls in particular are a pretty hot seller. Come with a little green chicken logo on them. We of course, Pro V1s, nothing but the best for our brands. But other than that, Steve, it's always great to chat with you. You can find all of our work at doomberg.com. And really appreciated the conversation. Looking forward to the next one.
Yes, sir. Thank you very much for coming on the show. I'll put your links down in the show notes. You have a great rest of the day.
Yeah, just last point. Next time you interview, you better be wearing a Doomberg hat. That's my only request.
Okay. Deal. Alrighty. Thank you, Doomberg. And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.